It's one of the most popular tools in the world. A lot of people use it. Um, some people, live, die by it, right? So real quick, for those who don't know, Fibonacci retracements are ratios used to identify basically potential reversal levels. All right. So the most popular Fibonacci retracements are the 61.8, 38, and to me, the 50. All right. So this is where you can get your fibs right here on TradingView, right under Pitchfork fibs. And the way that I use them, again, I like to use fibs based off of each extension of a leg, right? So some people like to do the entire chart. So literally I'm talking about from this low to this high, right? Again, some people like to do kind of like support and resistance. So they'll have it like from here to here. Some people like to do that. Some people go on the higher time frames and they'll mark it out. The way that I like to do it, whatever time frame that you're utilizing, I like to do it from each leg extension point. So if I'm identifying this entire leg, right, this uptrend, I'm going to start from below and bring my retracement all the way up to that high, right, from that low to that high. Now notice how price came to where that famous 61.8 fib, right? Now, do keep in mind, at the end of the day, price can retrace to any one of these fib levels, right? Like some people, they like to eliminate some of these fibs. They only keep like the 61.8, the 88, some of the extension levels, so on and so forth. I keep them all. Now, again, like any tool, and I preach this all the time, it doesn't matter how you use it. It's your understanding of it, right? A tool is only good based on how well you understand it. How well do you know how to use it? If you don't know how to use a calculator, it's not going to be useful to you during a math test. It's just not, right? So it's all based on how you use it. Now, what I like to do with fibs, I like to use it in conjunction with other key factors that I'm utilizing in the market. So for example, I have this impulse here, right? So this is my extension of this leg. So it came all the way back down to that 61.8. All right, perfect. I'm at that 61.8. That's cool. So notice that price reversed and went all the way back up to that 100, right? To that zero fib. Okay. But do you automatically buy right here? And this is where a lot of people make that mistake with fibs. They think because price came to the 50 fib or the 38 or even the 61, I'm a buy or I'm a sell. No, right? I use this in conjunction with everything else. So if price came to this key fib level, right, this 61 again, and price will potentially come back to the zero, what I'm going to do is I'm going to track it. So I'm going to always, and this is why I always draw trend lines, right? I always draw trend lines. You guys know that. I've been drawing trend lines since the beginning of time, right? For those who are on bounce back, what's the key factor in that strategy? Draw a trend line. Because drawing a trend line is like your added insurance. So when I draw my trend line on top of the fib, and then let's say I factor in my MACD, all these things here, now I have a pretty good sound strategy. I have multiple confluence on whether or not this will possibly reverse. So let's say I jump down one time frame, right? And I always say this, anytime you're analyzing the market, you should always jump down one time frame. So let's say I jump down to the 1 hour time frame. And I notice price gets to that 61 fib. Now look at here. Price starts to consolidate. I have my downtrend here. But look at my MACD, right? My MACD is starting to slow down. My MACD is no longer on a strong downtrend, right? If anything, it starts to cross over. If you zoom in, what do you see? You see my MACD line, the blue line, crossing over my signal line, signaling a possible change, shift in direction. Okay, so before I automatically buy this, I'm still waiting for confirmation. So notice, I don't get my confirmation again until I got my MACD crossover. I got my break of the trend line. I got these multiple confluence here. And then, of course, I got the bounce, right? Price rejection on the 61.8 fib level. So you see how I use multiple confirmation before I buy or sell? So now this is a good area for me to enter the market, right? So entry here, stop loss below previous low. Stop loss below previous low, and then as you can see, move to the upside. And like I said, based on how you use fibs, you can ride fibs to each extension point, right? Each extension point. So on and so forth. But my main thing is, once price got here, you see how I put all of these things together, right? And this wasn't even factoring in my EMA, right? If I wanted to take it a step further, this wasn't even factoring my EMA. I put my EMA in this, and then I wait for price to get above my moving average. Now, I got multiple confluence, multiple confirmations. I got my fib, I got my moving average, I got my MACD, I got my break of trend line. Look at that. That's basically all these, that's 4 confirmation, right? That's 4 confirmation. So what I'm showing you guys is how to basically formulate your own analysis and be comfortable with it. So when you're buying and...
Hello, good afternoon. Good. I'm okay. Oh, you I sent you the images. You didn't confirm it? Uh-huh. Okay, well, I need some feedback. If you want changes, something that I could come and see you. Okay. Just now.